things quickly, please use the chat box to ask questions. So if you have questions during the presentations, just send them in the chat box. My name is Confidence. Sorry, I did not introduce myself. My name is Confidence and I'm the staff of Andy. And with me here today is my colleague Joshua. And so both of us will be watching the chat box to take note of any questions that you might have. And also try to limit activities in the chat box to enable us to take note of important messages. So just keep your messages coming, but try to limit the activities. Feel free to connect as always with other participants. And also finally mute your audio always, except when the facilitator needs you to speak. So to start out, while we try to take 2 minutes to wait for other participants to join, I'd like to know you, what organization you're joining us from and where in the world you are. Since I have the mic, I'm going to start. My name is Confidence. I work with Andy, and I'm currently in Lagos, Nigeria. So just tell us your name, where you work, and what country you're joining us from. What city and what country. So if you're from Accra, Ghana, please let's do that quickly, get to know each other. Let me see if I can monitor the chat room so I can give you a shout out if you send yours early.
Hey everyone, I'm an investor with Vested World. I am in Chicago, Illinois, US.
Thank you, Jeff. Okay, I see others in the chat box. Hello, Sam, welcome. Hello, Kofi from Ghana. Sabrina of Green Matters Capital, thank you. She's here to support Shada, who's speaking on the panel today. Thank you very much. Please keep the introductions coming in the chat box. Desi, you from DAI Capital London, thank you for being with us today. And we have Lauren from Pesesha, Ghana. Dominic Owekisa from ADA Luxembourg, thank you so much for joining us. Angelina Diu from Invest in Africa, joining us from Accra, Ghana. Wow, people from different regions. We have Shada from Green Matters Capital, Adetong from Abuja. Thank you so much. Fatayo Olayemi from Faith Foundation, yes. Also here in Lagos, Nigeria. Thank you very much for joining us. As others come in, they can just fill that in. We're moving straight into our session quickly. Hi, Samuel, I see you. Anu from Act Foundation, I see you. Thank you for joining us. Samuel from Mercy Corps, thank you very much. So I'm moving us straight into our session. Like I said earlier, we have very seasoned facilitators. I believe you've all seen the lineup, and they're going to be sharing with us today on the SGB investment pipeline. So to start out, I'm going to hand over to Nelson Amo from InnoHub to take us on from here. Thank you very much, everyone. Nelson, please take us further.
Nelson, you're on mute. If you're speaking, we can't hear you. Could John probably take it off from here while Nelson is sorting the connection?
Sure. So good morning, everyone. I'll let Nelson put up the slides in a moment when he's back on. But to introduce the session, Nelson and I have been collaborating for a while and talking about the continuum of the investment pipeline. So many of us on this call today are entrepreneurial support organizations. We work with entrepreneurs and help accompany them from the sourcing. So finding the companies that are out there and recruiting them, providing services that educate, that provide financial literacy, looking at the impact of these companies, and then providing all kinds of service that brings them towards investment readiness. I think sometimes we think of these different organizations that are entrepreneurial support organizations as discrete, but we wanted to promote the idea that there's actually a continuum, that there's a series of services, and there's a kind of handoff that can happen between organizations to more effectively get them to the finish line, which is really bringing, success to the companies, and often that involves raising capital. And so the session today is really about that continuum and how can we strengthen the continuum? How can we better succeed at bridging the gap between companies on one end and investors on the other end? And so that's an overview. I see Nelson's back on. So Nelson, feel free to take it from here. And if not, I can continue. All right, seems like Nelson, you're still having some problem with sound.
Hi, everybody. Good.
Oh, go ahead.
Good morning. Where you join us from? I introduced this session. We will go straight into really looking at the issues of SGB Investment Continuum. And the whole conversation is around the challenge investors face trying to find the right kind of deals for them to consider, the pain they go through in really doing deals or finding the right kind of ventures to put in. At the same time, you have on the other side, SGBs really crying about the fact that they struggle to find investors to do the right deals with them. And therefore, there is a huge mismatch or a disconnect. Having delved into this for about 5 years as InnoHub and really working with other partners like John and what have you, we've come to realize that there is always one consideration when at one point, SGBs or SMEs, to be used interchangeably in this particular conversation, really see investors as one side who they could just jump to and go to. At the same time, investors also think that they could really put out a call and immediately find businesses to apply, and that would be the end of it. They may apply, you have lots of them applying, but as to whether they fit your pipeline is another issue altogether. For this conversation, we seek to really look at the various players in the whole chain of getting one deal done and how we could optimize the role and purpose of these players. So John and I will be starting it off, but along the line, we have officers of 3 funds who will be joining to share their story as well. So we have Wangara Green Ventures, we have Collapse, and then we have Vested World also sharing their experience on finding deals. So from the beginning of the whole continuum, we're looking at how we identify SMEs or startups. And essentially at the beginning, you have incubators or accelerators who start off with designing various programs, putting in call for applications, and you have startups applying through. And through these programs, they work with them through training programs, they have mentoring, and then also helping them to design their growth strategies. At this stage, you typically would have a lot of these ventures who may be quite early or may not even have their strategy at the right place. So there's quite a lot of work to be done with these ventures before you could really start thinking about how do I even build the right business plan strategy? How do I build my financial model? How do I start putting my investor deck together? So there's quite some heavy lifting at the first 2 stages. Then you have the 3rd stage, which is basically a major bridge between they getting their plans done and they're executing to getting to the point of finding finance. So there is a deal readiness stage. And typically we talk about investment readiness, but there is really a huge difference between being investor ready and being deal ready. So the investor ready SME or SGB would typically have their strategy in place, they understand their markets, they actually have done this for about 2-3 years, they have some traction to show there is early customers, early revenue, they tick quite some boxes. But do they have the right documentation in place? If an investor asks you to give me the deal room or they ask for some documentation, we have seen stories where sometimes an investor sends an email and it takes like 6 weeks for a venture to reply because they really have not taken time to build these documentation. So before they really start engaging investors, there is that place of business development provision where they supported to really put everything in place in terms of a deal room. And then it's only after this stage that we could actually start thinking of investor matching. How do we identify the right investors who really would see your business as interesting to them? It would fit in their profile of ideal SGBs, and start engaging them from there. Part of this really has been just introducing the SMEs or SGBs to these investors, and they pick on from there. But a key missing element is engaging investors, where you have service providers who can engage investors with these startups, engage them on their terms and the term sheets. Really, how do you structure something that would benefit both the business and the investor? So there is a huge missing part of the conversation around providers who can engage investors along with the startups. And at the final stage is where investors can now say, we have approval to do a due diligence on you. And once you go through that stage, we can look at closing the deal, we do the investment, and then let's look at executing the business plan, where we want to look at growth, we want to look at impact, and then monitoring for results at this stage. In the whole mix, there are various challenges along the line. And if you look at the first stage, where you have incubators, accelerators, typically a lot of attention is really around finding the deals, and investors want to find deals. You have grant makers finding the deals to put the grants in, but there is little attention that goes to that stage where somebody must roll up their sleeves and work with these ventures to get to the place where they could be investment ready. So the first stage is most times poorly funded. And because of that, they are not able to attract the right kind of staff or human capital to run these programs for them. Program design becomes challenged because they don't have the right kind of skill sets. You don't have people who are not very experienced and getting jobs in these places and don't really understand what to do. And most times you would expect accelerators to be able to provide some seed investment in these ventures, help them to really build a bit of traction before you can start talking to investors. But typically, accelerators in emerging economies like Ghana, what have you, don't even have the muscles to be able to do such seed investment. So they go through all of these programs and they are still yet to prove any traction. And these are quite some key challenges that need addressing if we want to talk about ventures who have proven the traction over time. And then you have the mid stage, where you have business development service providers who typically, because you don't have the right ventures going through the incubation acceleration stage, they've not proven their model. The service providers also are not able to find the right pipeline of ventures who could even pay them if you charge a little amount. And most of them will tell you, this money, if I have, I would rather put it in my business. So there is the limited appetite of service providers to work with these ventures over time. And sometimes it will take you about 6 to 18 months to work with these ventures to get to the place where they can really engage investors. So if you look at that part of the chain, there is a huge challenge as well that needs to be addressed. And ultimately, once the top of the funnel is having a challenge, it trickles down to investors who now, I've heard of stories of investors who really for about a year to 2 years struggle so much to find any deal. Sometimes they just settle for what is available, but ultimately it's not the best they would have done given the right conditions. So if we want to have great deals done, we want to have impact investments done at the end of the funnel, there is really the need to look at it from the very top of the funnel, where you have incubators, accelerators who would identify these ventures, who would build them, who would support them to become investment ready. Over time, pass them on to, or even before that, if they can, do a pre-seed or a seed investment in these ventures, help them to prove a bit of traction and prove their model. They can also debunk any assumptions as a result of this test. And then ultimately, other providers would come in to see how they can build the story, build their decks, build their models, make them deal ready, build a deal room, and hold their hands to engage investors. The process needs not be that painful if we understand the full chain, but because we are looking at it mostly from as a silos point, we don't really get the right results at the end of it all. So if we can look at it from the beginning of stage 1 and 2, and then stage 3 and 4, before we start as investors or capital holders or grant makers looking out for deals to invest in or to put the grants in, it will become much easier. And we've seen similar cases. I will share some of them towards the end, but instances where you have funds who just fly over from New York to Accra, and after 3 weeks, they fly back saying there are no deals in the country. It has to be built ground up. So I will pause at this stage for John to continue.
Great, Nelson. Thanks for setting that up. And I want to take what Nelson said and ask a couple of questions. And I encourage you all to chat in the chat box. There's a lot of good, great participants here that have something to say. So feel free to respond and share your thoughts in the chat box. But first, from the entrepreneurial perspective, thinking for the entrepreneur, what do I need? What do I need and how do I get it? What do I need for my company to allow my company to grow? And then from the investor perspective, how can I build a thick pipeline of investable companies? And then most of us here are entrepreneurial support organizations. So we should be asking ourselves, what can I do to provide these needs, both of investors and of entrepreneurs, to bridge this gap as we discussed. And this diagram is actually a diagram that we use at Pangea to illustrate what we do, but it's about the bridge that needs to be built between the many high potential businesses. We focus on agribusiness, but building the bridge between the businesses and the capital solution providers. We say appropriate capital as a term that means we're matching the right kind of investor and the right kind of capital to the needs of the business. So with those questions, you know, how do we support the entrepreneur from point A to point B, being wherever they are today in terms of their business and their investment readiness to the point at which they can close a deal with the investor. As I was saying at the beginning, one of the problems that we note is that it seems that as entrepreneurial support organizations, we don't see this as a continuum. We see it as discrete actors, and many times competitive actors, which yes, there's room for competition. But there's also plenty of room for collaboration. And I think if we think of the support that we provide as ESOs to entrepreneurs, it's more like a relay race with the different sections that Nelson had shared in his diagram being handed off from one provider to another. And if we don't get enterprises to the finish line, then we're not achieving our goals. And so if as incubators, for example, we're not seeing enough deal flow at the end, then we need to find solutions so that there's a better handoff to someone who can get those enterprises to the finish line. I also want to talk a bit about specifically the business advisory services or business development services, because I think that seems to be a gap in the continuum. And we at Pangea Ventures note that gap, and that's the gap that we intend to serve. Fully recognizing the critical role that incubators and accelerators provide, because there's so much sourcing that happens at a local level. It's hard for us to know, it's hard for the investors certainly to know who are the great companies that are out there, especially in rural areas that are looking in agribusiness. But sourcing these companies from all over is a difficult job. It takes communication. It takes financial literacy education. There's so much that happens at that level that we need to take advantage of and collaborate with those providers. Then I also want to touch on the question of what can investors do more in this area. There are investors that provide technical advisory facilities or TAFs, but these are not omnipresent. And how can we, and they tend to be large in the larger funds, like the African Agriculture Fund, but how can we provide sort of scaled down technical advisory facilities for smaller funds? This is a question that I want to put out there. And finally, in terms of business advisory services, management consulting, in the world, there are a number of these large management consulting firms like the Accentures, the Dahlbergs, the PwCs, but they're not providing typically services to the kind of companies that we work with. They're looking for ticket sizes that are far too big. And certainly they play a role in writing reports and supporting the missing middle growth generally, but they're not hand-holding and providing this kind of services. And so how can we find a way to provide these kinds of management consulting services at a scale that's appropriate for the enterprises that are in our ecosystem? And then finally, the last point I want to make is in terms of the size of investment and the minimum deal size for investors. So as we know, as ESOs, there's a challenge to find investment sizes in the missing middle. And fortunately, there are an increasing number of investors out there that are looking at the capital needs of SMEs between what I would say in the missing middle is about $100,000 to $1 million. Now, it's true that some organizations do provide, as Nelson said, some seed funding, perhaps in the range of $10,000 to $50,000. But once you get beyond that, there's a real gap until you get to $1 million or more. And so how can we address this gap in the middle? How can we learn from some of the investors that are out there, like Growfin, like Novastar, like Triple Jump, that are finding ways to create funds that are smaller or that have smaller ticket sizes? Clearly, there's a challenge for investors to do those smaller ticket sizes because of the cost of due diligence. But is there a way to find the right provider to give these this access to capital in this missing middle size? Should it be funds managed by incubators? Or are there ways to create partnerships with incubators? And I think perhaps Wangara will talk more about that in their work with both InnoHub and the Ghana Climate Innovation Center. And so that's something else I want to address in the discussion, is how can we find more investors to create deal flow in the $100,000 to $1 million category. I see a note in the chat box to put in the slide into presentation mode because it's a bit hard to see. So with those comments and those questions, I think it's time to ask the investors that are in the call to share their perspectives. And Nelson, why don't I pass it back to you to make the first introduction?
Thank you very much, John. So this conversation is really about investors and the deals they try to make or deals they have made in the past, and how the experiences were in finding these businesses. So in that spirit, we'll be inviting three of them. For a start, there is Wangara Green Ventures. Wangara is a climate focused or green focused fund. And Yvonne, the investment director, is here to share the experience with us. So Yvonne, could you kindly tell us some of your experience in finding deals and investing in them?
Okay, thank you very much, Nelson and John, for your earlier presentation. And good morning, good afternoon, good evening, everyone, depending on where you're joining us from. So Wangara, we are an impact investing company based out of Accra, Ghana. And we invest in early stage businesses in the local currency, Ghana Cedi, in amounts of the equivalent of $50,000 to $500,000 in the first round, but we have the opportunity to follow on up to $1 million. We basically invest mainly for financial return and then also for environmental impact. We've been in operation since 2018. But we made our first two deals in 2020 after screening over 200 companies. So that's more of a success rate of 1%. And over the years, we've seen that one of our biggest pain points has been sourcing quality deals. We do get a lot of pipeline companies, but you realize that you can really not send most of them even to your IC. And so we've seen that most of them are not investment ready. And then even when they are investment ready, you realize they are not deal ready yet. So over the years, what we have noticed is the challenges have mainly come from these investee companies or prospects not having the right documents that we need. Nelson spoke a bit about that in terms of being deal ready. Most of them also do not have appropriate business plans, and they usually will need a bit of tweaking and doing some kind of heavy lifting. So what has worked for us really is to form partnerships with a lot of incubators and accelerators here in Ghana. InnoHub is our main partner because they manage our investment readiness facility, and I'll share more on that along the way. But we are in partnership with the Ghana Climate Innovation Center, the Cosmos Innovation Center, and other incubator programs that you might find here. One thing that has been very beneficial to us is that, first of all, when it comes to pipeline building, these ecosystem players have been really helpful in giving us quality pipeline. InnoHub does a lot of accelerator programs, and we are invited to listen into the pitch of these entrepreneurs. And usually we are able to then give our feedback as well as to whether these businesses will end up, being quality pipeline for us to send to our IC, so they can also raise additional capital. So building good pipeline from these programs has been really, really helpful. Secondly, we also talk about the pre-investment readiness and post-investment readiness, post-investment support that these accelerators provide. One thing we notice is our core work is in making deals. So we do not want to be involved in the heavy lifting before we send the deal to the IC, because we normally will have lean teams that wants to work with businesses that are deal ready, and we can really screen them quickly and send them to our IC. So InnoHub has been managing our investment readiness, and it's not, investment readiness is not cheap. So it costs these accelerators time, and it costs them money to pay their teams to do this kind of heavy lifting. So it's important that, I think, as a fund, that you have this investment TA facility to support that. And we were able to get InnoHub to manage that. So we work closely with them. GCIC is also another great partner that helps us because of our green focus. So they run incubation programs for climate innovators, and they also have an investment readiness program, which they work with Wangara to look at the deals that we think we will be able to send to IC, so they can provide that additional support. And in these pre-investment readiness programs, you find that they will help the entrepreneurs to build their growth plans, and anything that we find out in our assessments and screening that it is lacking, like having the appropriate growth plans, as well as having even a market study for what they want to do, is taken care of. And then for Wangara, after we have gotten approval from our IC, we normally have a 100-day plan where we work with the businesses and entrepreneurs to fix anything that we found out in our due diligence, but they were not necessarily deal breakers. So here also we do work with incubators and accelerators, and our main partner for this is InnoHub, where they support the businesses to build appropriate manuals, and if we need to bring in a resource person to work with them like a coach in their respective industries as well, we apply some of these post-investment facilities to help the entrepreneurs. One thing we notice is it's not, they don't normally take it serious. The businesses don't take it serious if it's entirely free. So we do a cost share where Wangara bears majority of the cost, and if the deal goes through, the business will also bear a percentage of this investment readiness support. And then finally, what I can say with respect to accelerators and incubators supporting us has to do with giving us some sort of being a reference point on to give us some kind of background check on the entrepreneurs themselves. You realize that most of them have programs, and in these programs, they will probably give the business some kind of grants to support them. So if we want to go ahead with investment, it's helpful to go back to these incubators and accelerators to ask exactly how these entrepreneurs really use the money, how their attitude was during the program, because some of the entrepreneurs, if once they get into the accelerator programs, will just sit back and just be sending anyone to go and represent them, because they probably think there's no money involved. So we want to also get a sense of the character of the business. And usually these accelerators and incubators are really helpful in giving us that kind of information. And then finally, I think that when you look at the continuum, it doesn't just end with the early stage investors like Wangara, but we also have the PE funds and other investors that will usually invest beyond the amounts that are limits, which is 1 million. So we see that they also give us additional pipeline, and they also become a rich pool for us when we decide that we have invested and we want to exit and want to move the business to the next stage in the conveyor belt, if I can use that. So I think it is very helpful for all of us to collaborate within the ecosystem and share information. If we are able to work together as a team and not necessarily as competitors, and John mentioned that, it will help all of our work, make our work easier, because it's a close-knit community, and we'll be able to support these entrepreneurs and SMEs and be able to build wealth for our various economies. So I'll leave it here and maybe throw more light during the discussion. Thank you.
Thank you very much, Yvonne. Quite insightful points. I remember sometime last year where Wangara was considering a particular entrepreneur, and you called me for my feedback because I had worked with him before. And I said, this guy is just a Facebook superstar. And that saved you tons of DD.
A lot of work, yeah.
Yeah, it saved you a lot of, and he later came back to verify that, yeah, you've noticed that as well of him. So quite important. Right, so yeah, we can come back later to really discuss some of the points you raised, especially around things like the TA facility, be able to screen up because of the support you could have from other parties. But in the meantime, we could move to Shada. Is a business development lead at Collabs. Shada, if you're on, you could kindly take it up now.
Great. Thank you so much, Nelson. And thank you, Nelson, John, and Yvonne for actually setting the tone and for also having Collabs as part of this discussion. I think it's a great way to dive in as we start building pipeline for Q1 and the other quarters moving forward. So I'm Sharda Vishwanathan, and I lead business development for Collabs, which is an early stage gender-focused portfolio that was launched by Grey Matters Capital, a private foundation based in Atlanta. We invest in enterprises that are very intentional about addressing the challenges faced by women, and that are looking at creating sustainable futures for women in the markets they operate. We have committed $5 million to invest in market-driven businesses that have a positive impact on women and are currently focused in East and West Africa with a ticket size of 100,000 to 250,000 USD. And our current portfolio spans across 7 countries and several sectors that include agri-tech, healthcare, and livelihoods. So what do we look for when we fund early stage enterprises is 4 key criteria. And the first one being impact on women. Being a gender-focused fund, the impact on women criteria is very, very critical to what we do. And we kind of look for enterprises that are also intentional about this and design services or products that directly tackle barriers faced by women. The second criteria that is important to us is scalability, followed by innovative, and finally early stage. So we are looking for early stage enterprises that have already tested the idea, seen it to be sustainable, and feel that revenue share is an appropriate type of investment capital for them. I think, just like what Yvonne took us through in terms of sourcing social enterprises, building that pipeline has always been a huge challenge. We get several applications, but are they really investment ready? Do they really align with the 4 key criteria? And if not, how do we really find those enterprises that fall into all the 4 criteria and are investable is always a huge challenge for us at Collabs. We In terms of sourcing pipeline, we do have a pre-screen application that we host on our website where enterprises can submit it on a rolling basis. That kind of helps us ascertain the initial fit and make sure that they align with the key criteria before we engage with them and invite them to submit the detailed proposal and shortlist them for what we call the bulge, the opportunity to pitch to our investment committee. And just going back to what has worked for us, partnerships. I think collaboration is very key in building the continuum and building that bridge and collaborating with different stakeholders is again very important. Given the stage that we target, we've been very intentional about partnering with accelerators and other investors who not only help in referring social enterprises that they've worked with and that align with our criteria, but it also gives us the opportunity to refer any social enterprise that has high potential but may not be deal ready to these entrepreneur support organizations who can work with them, make them investment ready, make them deal ready, and then pass it back to collabs for funding consideration. And just like what other investors experience, one of the major challenges we see while evaluating enterprises is they're not deal ready, mostly in terms of the financial documentation. I think that's one area where a lot of them struggle. They don't have the financial projections. In some cases, the person who actually helped them build the projections and the financial model is no longer with the company, and the current team is not equipped to address any questions that investors might have. So it is here that I feel partnerships can go a long way in working with each other and helping entrepreneurs and social enterprises to address the gaps and make them ready for funding. And also I'm going to kind of take a step back and go back to the question John had raised around the funding gap. A lot of times you don't find funding available for amounts between 100,000 to 500,000 USD, and what is the best way to make that an option? So I think it's a catch-22 situation, especially when you're working with early stage enterprises, because they do not have the funding to grow, but without growth, they can't actually qualify for funding or show the traction that they've had. And while this definitely creates a huge gap, we feel it also gives us opportunity to, design new financial instruments and credit products to bridge this gap. And I guess that's here where collabs, we do not provide equity or debt, but what we do provide is revenue share as investment capital. And we feel that kind of, bridges that gap, because a lot of times in our conversations from entrepreneurs, we've learned that equity is not the right capital for them because their model does not provide the scale and exit timeline that investors expect. And to qualify for debt financing, they often don't have the collateral. So we feel revenue share kind of bridges that gap. And, we know it's a risk, but if companies fail to generate the projected, revenues, we won't recover our investment. But we do feel that it's worth the risk to kind of, put in this catalytic capital, especially on enterprises that have the potential to grow. And for most of our portfolio companies, we've been the first institutional investor. So I guess, just coming together and, being innovative about how you want to bridge that gap could go a long way in addressing a lot of challenges. And I guess, before I pass it on to Nelson, in terms of the post-investment support, I think at Collabs, we do provide all our portfolio companies with technical assistance, which involves helping them build and formalizing their advisory board. while we do require that we appoint one member to the advisory board, I guess it's also a great opportunity for us to work with the companies to understand what their challenges are, what are the areas where they need strategic support, and accordingly identify someone with that experience, with that expertise, from the region where they have their operations, and appoint that member to the board. So I guess, kind of at Collabs, we adopt a very holistic approach, right from investment to working with the portfolio post-investment. So that's, just an overview of what has worked and what we do at Collabs. Thank you.
Thank you, Sharda. This is John. I'm going to introduce Jeff briefly. Before I do that, I just wanted to say, use the chat box. We want to hear the questions, the comments from the participants. We have a lot of great experienced participants with different perspectives, so please use the chat box. I have a lot of questions that I'll ask, but I'd love to integrate the questions from other participants. And so with that, let me introduce Jeff. Jeff operates and founded Vested World, which is a very unique fund that is an impact fund focusing on East and West Africa. I'll let him talk more about it. He says something interesting on his LinkedIn profile, that talent is evenly distributed across the globe. I'm sure we all believe that, and it's great to hear it phrased like that. Jeff has got a rich experience. He actually was in the U.S. Army and then worked in Lazard, a finance firm, on mergers and acquisitions in New York before he came to Vested World. So Jeff, over to you to share your perspectives on this subject.
Thanks, John, and excited to be with everyone today. Quick background in addition to what John has said. So Vested World, we invest in East and West Africa, primarily Nigeria, Ghana, Kenya, Rwanda, and Uganda. We do invest in pretty early stages. We've written checks from $100,000 to $1 million. Primarily, though, we are focused on a check size of $500,000. That's where most of our investing has taken place. We've been investing since 2016, and we focus on what I would call traditional industries, often that are utilizing technology to make their businesses more scalable or efficient. So in terms of I'll try to be brief because I am excited to hear your questions and help answer some of them. In terms of pipeline development for us, what I would really focus on for this group is it's incredibly important to know who your investor or potential investors are. It can be hard to find that information, and sometimes it feels like all investors are the same. But in reality, investors do take very different approaches to the work that they do. The first area that I think differentiates investors is the investor a thematic investor or a generalist investor? A thematic investor is often focused in a very narrow area. So, maybe agriculture or maybe healthcare. And you don't want to spend your time talking to an investor who you're never going to convince to invest in your company because you simply are not a good fit for the work that they do. So at Vested World, are generalist investors. Our goal is to build a diversified portfolio. We are open to new ideas. We're focused during the course of a year on one or two different areas, maybe manufacturing, maybe agriculture, but again, remain open to be convinced to look otherwise. So if you're talking to a generalist investor, my advice is just be super passionate about what you're doing and convey the vision for why it's exciting in your country or countries if you've reached that point. And they will be open to being convinced that it's something they should be focused on. The second area where I think investors can be different is, are they a passive investor or an active investor? So passive investors don't typically lead investment rounds. They are looking for investment rounds that other investors have already prepared them to invest in. Again, if you are in the early stages of fundraising or talking to investors, you likely want to spend less time with passive investors, because you're simply at the end of every conversation, you're going to get asked, do you have a lead, what they call a lead investor, and are you ready for investment? And, you know, again, if you're at that point, you're going to say no, and it's going to be difficult to continue to engage with them. So at Vested World, again, for us, we are active investors. We identify promising companies that we believe, you know, are deserving, or, you know, everyone's deserving, but that fit within our portfolio for investment. And we often actively work with those companies over a period of time, which can be 3 months, can be 3 years, to work towards an investment. What I would highlight for the group here is, for those investors, it is always better to start the relationship early, because those, you know, part of this relationship or this investment process is trust and a good working relationship and a shared vision. And as you can imagine, that's incredibly difficult to establish over, say, a 3-week period of time. It really does take time. And you may be asking yourself, for some of those in the audience, well, I'm not ready to have that conversation. Well, don't worry about that, and let investors worry about whether you're ready or not. Again, what a first conversation with an investor like Vested World ought to be centered on is, why are you focused on the business you're focused on? Why do you think it's going to be something that's going to have a measurable impact on your community and in the world? And if you've started your own company, you are always prepared to have that discussion. So please, again, you know, as it pertains to my organization, always be ready, or always feel comfortable reaching out to us before you think you're ready, because we want to help. You know, we want to first understand what you're doing, and also help you, if we can, build that vision. The third thing that I quickly wanted to touch on was this idea of advisory services, and the help that companies need to build towards bigger and bigger accomplishments. So as John mentioned, I have a background in the military, so I often think of things in 2 dimensions: strategic and tactical. On the strategy side, which is the big picture of, you know, where are you going, say, over a 5 or 10 year period, I think you should spend your time, for those who are still at a fairly early stage of their business, deciding on how are you going to implement your strategic advice gathering system. Decide what kind of people are you going to talk to get different viewpoints: investors, experts, government officials, local business leaders, you know, whatever it may be. Decide on how you're going to decide on which advice to take and which advice not to take, and then decide on how you're going to implement that advice. In my experience, this strategic advice can often be obtained for free. Many people, if you're super passionate about the work that you're doing, and it's likely to make a big difference in the world, people are willing to dedicate, you know, an hour or 2 hours helping you think through some of your strategic problems. Those same people, though, and I'll turn to this on the tactical side, are probably not willing to help you figure out which piece of machinery to put in your factory, whether it's an Indian model or a Turkish model, or because they don't feel like that's a good use of either your time or their time. So part of that is knowing what to approach which people with in terms of your questions. Lastly, on that point, we've seen advisory boards as a way to achieve this. as well as peer-to-peer mentoring is another good way. And often investors are more than willing to share their opinions because investors are great at having opinions. So on the tactical side, I would reiterate the comments made previously that this is probably too difficult right now for many companies to obtain and obtain at a price that works for them. In my experience, what you need is highly focused, committed expertise, and that often does simply just cost money. We had a company that we invested in back in 2016 that was setting up a factory. That's not experience that I have. That's not experience that many of these strategic advisors have. And is simply someone needs to be there over the course of the period of setting up that factory to advise. We were lucky enough to be able to find an expert to support them through a program called Partners in Food Solutions, which maybe some of you have heard. So there are solutions out there. And the interesting piece here is that your strategic advisors are probably those best positioned to link you up with the organizations that are able to provide you that tactical expertise. So I do think that it is beneficial for everyone here to think through that strategic advisory layer of your business and get that up and running in the hopes that that will also support some of your technical needs. So I'm going to pause there. Yeah.
That's awesome. Thank you, Jeff. And thank you to the three of you, which really, I think, Jeff, one of your points is know your investor, and you've all basically made that point. And that's a very difficult task. I think we should admit that it's challenging because there are a lot of investors out there, and the starting point is which investor. And many entrepreneurs are really not well equipped to know which investor to go to, and they go to the wrong one, and they get frustrated, and they either give up or they're unhappy about that. But choosing the right investor and knowing that investor or the subset of investors that are right for you is important. And so maybe let me open up that question about knowing your investor. One other thing is that I think we need more of this kind of exchange between entrepreneurial support organizations like incubators and accelerators and investors, so that we can better know your investor and learn together. But maybe Nelson, I can ask you what you think about this challenge of knowing your investor and how we can help entrepreneurs do that. And we can ask others to comment on that as well.
Right. Thank you very much, John. I think those are very insightful comments by all three funds on the call. Picking up from the very last point on knowing your investors, I think one of the things we do before we share a deck or a profile of a portfolio of decks with any investor really is to ask you for your investment considerations. We first will have a call with you, understand what you do, get your full checklist or your full criteria. I recently shared a similar one with Collapse Strada. And before that, we had a conversation. I asked her to send me their investment considerations, their full criteria. And based on that, we looked at which of our ventures we support would fit into that. We do same with Wangara. Any fund we engage, we try to understand what you look out for, so we don't just send you a generic thing. It's important because if you don't do that, you waste your time. You also waste the fund team's time, because they spend time looking at something only to realize that really it is nowhere close to what they are looking out for. And there are a lot of times when you engage investors, you introduce startups to them. In our very early stages, we had similar experiences where after the first cohort of our accelerator, we introduced some of them to some funds, and then you told straight away that the ticket size they're looking for doesn't match what the startups want in any way. There were times you had businesses looking for about 200K, and some of the funds said the minimum would is about $1 million. So if you don't spend time to understand, and I think over time we've been able to really appreciate what it takes and why you should really understand what the investors are looking for before you try to actually engage them on any particular venture. As you have it, is on a case-by-case basis. So based on any case, you need to be able to know what to do before you start engaging them. But I'm also quite curious And I think at this stage there would also be other questions in the chat room that we could be looking at. But lots of there are a number of questions on the issue of being investor ready versus deal ready.
I'm going to jump in since we lost your audio, Nelson. Yes, this
question conversation again tying that to knowing your investor. Each of them deal ready is, and I think that would really be helpful to the audience.
Let me make
John, you wanted to say something.
And then let me open it up to the other investors. But on the pain point, I see that Anatu Abdullah has made some comments in the chat room. Another great entrepreneurial support organization, Growth Mosaic. But yeah, there are many pain points. But the best way for entrepreneurs, I think, to find the pain points and address their pain points is to work with a good support service provider. You can't do everything yourself. You can't have all the answers, and a lot of times it's a matter of finding the mentor, the right organization that will that will help you address the pain point. A lot of time it's related. Well, there's all kinds of things that it could be, and it depends on each enterprise. It's really specific, so you really need to dig deeply into the value proposition of each company and the documentation of each company and see where the weaknesses are. In many times, even before you go to the investor, I hear you, Jeff, about, starting the conversation early, but I think you don't want to start it too early, and you don't want to go to an investor before you have the bare minimum ready to present. I'm sure you guys get a lot of requests for conversation before companies are actually ready. So let me open it up to the three of you for comment on that.
Yeah, I can go ahead by responding to that. Yes, I mean, a lot of times, like, Jeff and John, like you rightly said, we do get requests from entrepreneurs to have early conversations, but at the bare minimum to start the process, we do ask them for the pitch deck to understand what their focus is. Is their mission aligned with what Collabs is looking for, where they are in terms of, revenue? Are they post-revenue? Do they have some traction? And based on that, we do kind of, take the conversation forward. And also just linking to that in terms of knowing your investor, a lot of times, companies kind of retrofit their mission, to align with what we're looking for at Collabs in terms of being intentional about impacting women. And I guess that's where the pre-screen form helps us to understand if their focus aligns with what we're looking for. And if we do shortlist them, then I usually have my first introductory call to also take them through our criteria, take them through our investment approach. Because a lot of times companies are not ready for revenue share. And so, it's our effort is to make sure that right from the first conversation, they're aware what the investment capital looks like, what the terms are. We share a link to our sample term sheet, which is available on the website, address questions they have around the terms, so that they know what they're getting into or what they can expect, when they are applying to Collabs for funding. So that's how we kind of, manage the process at our end.
Yeah, maybe if I could just jump in with a quick sort of reflection. I do agree, John, with your statement that you want to be prepared for these conversations. I would offer a slightly different angle and suggest that as a young company, what you want to optimize for is controlling to the best extent possible your communication with investors. Don't put yourself in a position where the investor's expectation is that you're going to present, a 2-hour overview of the ins and out of your company, and you come prepared to that meeting to have a very short overview, right? Like, that's the mismatch that you want to avoid. But again, frankly speaking, from my position, if you, on the other side of that spectrum, if you reached out to me and said, hi, I'd just like to introduce myself. would it be possible to have a 10-minute conversation and I can explain to you the vision behind my company? I don't have any materials prepared, but I'd like to get on your radar, but I don't want to waste a lot of your time because I don't have the other materials that you might ask for. That would be, that would blow my mind. I would love that, because you're correctly matching my expectation or setting my expectation for what I might learn in an appropriately set timed conversation for what's going to be exchanged. So I do think there's nuance, and you know, apologies for all investors. It's really hard to understand that nuance because no one talks about it. So I'm glad that we're addressing it today. But yeah, that's just some sort of additional thoughts on my end.
I have a slightly different approach, because I mean, unlike you, Jeff, if you just sent me an email like that, chances are I'll see you as really not prepared for fundraising, because if you're running a business and you are at the point where you're ready for an external investor, my first thought is you will do some research and find out which investor out there will be willing to invest in your business. So for example, before you reach out to me asking for an investment or to even have a call, I would want to believe that you would have checked out what Wangara is all about and what we're investing in. So for example, climate is really something very important to us. And so if you are not really doing anything that is having an impact on the environment, or you do not have an intention to alter your business in order to have a positive impact on the environment, you will not, chances are you might not be successful with us. Now, to come to the point of, do you come to the investor directly or do you go through an accelerator or incubator? I think it's on a case-by-case basis. Our first investments, we actually use 4 months from screening and assessing the company to getting approval for disbursement. And this was really a business that was led by an experienced promoter or entrepreneur. He had worked in consulting firms, so he understood what it meant to raise funding. And so he had a deal room ready, and all documentations we needed was all set. And he didn't need to hire or go through an intermediary to get those done. But on the contrary, our second investments, we sourced them directly through a program that we were represented. But at the end of the day, when we screened them, they had some but not all the documents. So we quickly paired them with InnoHub to support them get investment ready. And because they themselves were also serious about raising funding, it wasn't too difficult to get them to the point where we could send them to the IC and we could close that deal within 6 months. So I think that different entrepreneurs have different readiness levels. And so it's important that at the basic, you have your pitch deck ready. So if you're sending an email, can I have a chat or a call, you should at least have some kind of pitch deck that even if I agree to speak with you, you should be able to send me that pitch deck after the call or a few days after. That's one of the ways in which, because we screen very fast. There are a lot of businesses we are screening because we want to screen quickly and get to the point where we can prepare documentation for the IC. And it's a lot of work. So we really do not want to be caught up in a lot of calls and people now trying to find out, what do I do? How do I get myself to get funding? Those are the jobs of the intermediaries, which are the incubators and accelerators. So if you are working in a stage where you haven't gotten to the level where you really have even done sold a product to a customer, then you shouldn't be going to investors, but you should be going to incubators and accelerators like the InnoHubs, Growth Mosaics. They can take you through that process before it gets to the point where you can now approach an investor like Wangara. Thank you.
Great comment. We can see every investor has their own way of doing things, but it just underscores the importance of knowing your investor. And I think, Jeff, you're probably on the more generous side with your time than many others. I've had experiences with others where they ask for a special short form, you fill it out and you get nothing back, even though it seems to correspond with their investment thesis. And then I followed up, tried to ping them later, and finally they say, well, you're just not suitable. Well, at least let us know that, and ideally that would happen. But the key is know who you're going to, because it may be a good fit. And like Yvonne said, get help with from business advisors, from incubators and accelerators to do that. I want to have two questions here. One is for Andy. I want you to maybe I'll ask this and then come back to you in a minute. But what can Andy do to support this continuum and the connectivity in the continuum between the incubators, accelerators, business advisors, service providers, and investors? But before that, I wanted to ask the question about who will pay for these investment readiness services. And there was a question in the chat box about donor funded programs. Clearly, that's one growing opportunity, is that donors are paying for these services to get to investment readiness. Yvonne, you mentioned that the companies themselves should have some willingness to pay. Maybe Nelson, you want to start us off in your thoughts on that. We can go to maybe Shardov, you want to touch on that next. Who pays for who is or who should pay for investment readiness services?
Okay. Yeah, thank you, John. I will start on that. I think I will link it to the question on donor funded programs. In the first is we understood that if you creating a fund that is looking more on climate sector, there's going to be a huge challenge in finding the right pipeline. So we were very deliberate in creating the whole Ghana Climate Venture Facility, with the fact that there is a need for pre-investment pipeline and really investing in such. So this program was a World Bank funded program. And in a part of the budget, we really carved out a part that was just ring-fenced for pre-investment and post-investment TA. So clearly, we understood the value of that, and it's proven to be quite helpful for a number of these businesses who couldn't have paid for market research, couldn't have paid for a number of things, deep dive. Some of these things were done or funded through the program. But beyond that, I think I would also want to throw the challenge to other funds that may be struggling to find deals. If it takes you a whole year to get 1 or 2 deals done, and maybe creating a pipeline program with a little support in there could help you get more deals done and deploy your capital as faster than you would have done in a normal case, I think it may be worth considering such and not really wait for deals, but you could actually be very active in finding the deals or creating the deals with you. You don't have to create it yourself. You could also work directly with other players in the ecosystem who are doing those. They would want to roll up their sleeves and really work with these startups or SMEs at that stage. And sometimes it's much better for others to work on them, because then by the time they come back to you, you see a much different of it, and you're not so invested yourself as a person, emotionally, mentally in these businesses before they come to you for your due diligence. So, yeah.
Sharda, do you want to comment or some?
Yeah, sure. So in our experience, what we've really seen is that a lot of entrepreneur support organizations that have these investment readiness programs, they do charge minimum fee or kind of have a revenue share approach with the companies they work with. But I guess, it definitely takes collective effort, and there are a lot of development agencies now that have funds, technical assistant funds, kept for such programs. So I would say, it should be donor funded, and we could, because startups, especially growing state startups, do not have the capital, But I also see the point that a lot of times you need that minimum investment to show the commitment. So it's, again, it's a balance that you will need to strike when it comes to this specific aspect.
Thanks. Let's go over to Andy. I don't know if you want to chime in on these questions. There may be something you want to say about the continuum.
Oh, great. Thank you so much for the question, and thank you all, facilitator. My name is Olatunji Ajani. I'm the West Africa manager. This has been a very wonderful conversation, and has probably been one of the reasons why I'm still very passionate about Andy work since 2016. I've been leading the chapter. It's a great question. How can Andy help to continue to connect investors with the entrepreneurial support organization? One thing that we've done and that we continue to do is to create a safe space for conversation, because we feel that the biggest challenge is that the investors and the ESOs don't have conversation as often as possible. Like, for example, this workshop that we are having, you realize that two of the investors have different perspective, and the ESO have different perspective on how they want the entrepreneurs to approach them. One would prefer maybe the entrepreneurs to reach out and let's have an informal conversation first. But another investor would probably want to have some things ready before you approach them. So one thing is that creating a space for the ESOs and the other actors and the investors to have conversation will continue to help to bridge that communication gap. And we do that through workshops like this. The other thing we try to do is to continue to map the ecosystem and try to make sure that there is a clear description of the different actors and the stage of businesses that they support. We recently launched the remapping of the Ghana entrepreneurship ecosystem, and we are exploring the use of technology to ensure that we use stuff like machine learning to continue to help to update the information about the different actors on the snapshots. So that's the other thing we're doing. We also use our conferences to bring the different actors together. And hopefully this year we'll try and explore to use the virtual platform to help to convene all our members and actors again to have conversation and learn about their work, their areas of focus, and how their strategy and how they approach investment. So that is that. The other thing we try to do is we have a learning lab called the SGB Finance Learning Lab. And that learning labs create like a continuous conversation platform for the different actors and businesses. We have different discussions in that learning lab where you can ask questions. So it's not just going to be like a one-off workshop like this that we are having, but you can be able to meet those investors on a regular basis, and investors also can meet the ESOs on a regular basis and build relationship. Like one of the things that Nelson said that I really love so much is that this ecosystem, entrepreneurship ecosystem building is a relationship game. And you have to start building that relationship early. It's not just the first time that you meet people that you want to jump and tell them. You want at least over time for them to be aware of the things that you're doing. For example, I've known InnoHub since 2016 that I've started leading Andy, and over time I've seen InnoHub grown, as in I've seen InnoHub connect different actors in the ecosystem. We build very strong relationship. I know very well the kind of thing that they do. So building that relationship helps to be able to bridge that communication gap and help to ensure that you can work together. And lastly, we have a service that we also provide to Andy members, which is providing one-on-one connection or helping to facilitate introductions for our members. So our members can reach out to us. They can go to our website to use what we call the member map to look to kind of extract members that are doing supporting the kind of business that they support in their area of focus, in their thematic areas, and they can approach us, they can ask us to make introductions. I think one of the privilege that we have as the chapter team is that we can see, we talk to different members at different point in time. So if we're talking to a member that is looking for an accelerator that they want to give X amount of money to, and the focus on maybe climate, focus on women, we can pick up the top of our head and say, okay, you should talk to this person, this is what they do. So we provide like that secretarial platform where we can be able to help to connect the different members to who is doing what. So those are some of the things that we do to help to bridge that gap of connections and communications. And if you have any question on how we do that and how we can help you to facilitate that such connection and you're a member on the platform, please reach out to me or reach out to Joshua, our confidence. I will be happy to do that. I will hand it over to our speakers.
Thank you. Thank you. That's great. We're coming up on, it's 10:15 and the session ends at 10:30. So we have just a few more minutes. I think as we close here, why don't we allow each of the presenters to share a minute or two of key points that they think they want to highlight from this discussion. We can go first Yvonne, and then Sharda, and then Jeff, and then Nelson, same for you, and I'll wrap us up. How's that sound? If that sounds good, let's hand it over. Yvonne, do you want to share some summary points?
Yeah, I think for me, my main point will be on collaboration, and also for our entrepreneurs, don't hold back on asking for help, especially from these incubators and accelerators. I realize most of them are really quick to move to the investor straight away, but depending on where you are, you may want to start it off with getting some business development assistance, which will make your life much easier and not get you frustrated. So I think that would be my biggest takeaway or recommendation out of this conversation. And like I said, I saw a note in the chat, but regarding whether it would be relational or relationship or transactional, but I think that we've had to change our approach to working after going through 200 deals and realizing in 2018 we're really just moving round in circles. So trust me, we've been through that process, and it makes everyone's life easier if you're going about it the right way. Thank you.
You know, definitely for me, you know, one of the key takeaways is collaboration. I think that's what is the need of the hour. And you know, a lot of times when we seek for partners, you know, we want to go beyond mere referrals and have a more in-depth relationship, whether it's with other investors or with entrepreneur support organizations, and kind of, you know, understand each other's expectations and how we can support each other in terms of addressing the gaps in the ecosystem. So I guess building that trust, building that relationship, and taking it beyond just you know, referring enterprises or building a pipeline, and having a more in-depth support system at play is what is needed. And to entrepreneurs, you know, a lot of times, you know, you do have questions, and it's okay to contact investors, but at least set the expectations. You know, like Jeff rightly highlighted, it's good to set the expectation, and we're always happy to kind of give you an overview. So even if you might not be a great fit, but we can always facilitate introductions with other partners or other investors who probably focus on your sector. So it's always good to kind of ask those questions, you know, set expectations, and build relationship with investors and other stakeholders in the ecosystem. Thank you.
Guess I'm last, but hopefully not least. Just reiterate, you know, again, this idea of know as much as you can about the investor that you're talking to or pursuing. Another point on that, don't hesitate to ask the quote unquote dumb questions about what are they interested in right now? What do they think they might invest in this year? How many investments? What check sizes have they written in the past, and do they intend to write in the future? You know, if the investor comes back and says, we're not willing to provide that, or don't ask us those questions, that's probably not an investor you want to work with in the first place. So it's good information at the end of the day. Second point I would leave you with, fundraising and working with investors is very much about focus. It's finding those matches between their interests and your needs and your vision where it overlaps, and there's a very high likelihood of it working out in the end, and focusing on those particular opportunities. Is very easy to find yourself spread all over the place, having lots of conversations. And what that ends up doing is it limits the resources that you can put into the time, the attention, the thoughtfulness to those opportunities that really do actually have a high potential for success. So again, this idea of knowing about an investor and their process and whether they're interested or not, even if it ends up that they're not interested, that's good information for you to take away and say, I'm not going to spend time here. Instead, I'm going to spend it this other place that seems to have a higher likelihood of being successful.
Nelson?
Yes, thank you, John. Thank you very much, Yvonne, Shada, and Jeff, for the comment and all the questions that came up. But clearly, just to recap some of the highlights of the conversation, there is a challenge. And the challenge is that investors who hold capital struggle to find the right kind of deals to put in ventures or to put their money in. At the same time, you have businesses who are on the mill for years and don't find any capital for growth. To be able to really, as you could see from this continuum, which I showed from the beginning of the conversation, to get these deals done at the final stage, we need to really build the right kind of partnerships and relationships across the spectrum. We need to be able to build ESOs like accelerators who are able to not just to support them in the growth strategy, but also able to even do pre-seed or seed investments to help them to build the right traction, which could eventually sell to the investors in terms of what they are looking for by way of traction. We need to also really consider the need for other service providers who are able to do the right hand-holding, engage the conversations, engage the investors, understand them, and connect the dots between these enterprises or entrepreneurs and the investors. Case in point, for example, InnoHub and Pangaea Ventures, that's John, we have designed a program which is basically working with some Ghanaian agri-tech ventures or agribusinesses and to support them to find investors in the US market. So we, as an accelerator, we've done quite a lot of work on them. John is now engaging the investors from the US side of the market. And through this kind of partnership, we are able to see how many of these ventures he could now engage. Now, because we, through this partnership, are breaking the geographical barrier where there is now somebody there who is engaging these investors in the US, it really becomes quite easy to connect the issues that have been raised. And cross-border partnerships are really quite difficult to manage, and somebody must curate that. So there is the need to really work within the continuum, draw the line and see how do we connect all the dots so that we don't work in silos. If not, you will see entrepreneurs going through hubs and incubators who don't understand the end game, that the end game is to really support these guys to be able to engage these investors or get these connectors to send them to these investors. If we can understand the whole value chain, I believe that we could have much more deals in 2021 and going forward than we've had in the previous times. John, you could take over and wrap it up.
Thanks, Nelson. Let me first say apologies for the questions that went unanswered. There was a lot of great chat in the chat room and we didn't get to but half of it. And so I think Andy has agreed to try to condense some of those questions and share them. Maybe we can follow up after this event. First of all, highlighting what Nelson has just said about partnerships and about better collaboration and connectivity within the continuum. One reason that I like InnoHub is they do this so well. They do it with Wangara through the bridging the services they provide with the funds that Wangara provides. They're doing with Pangaea Ventures in the specific domain of agribusiness. And I think these partnerships are greatest when they are specialized, when they're focusing on a certain sector, or certainly a certain geography, but looking at the specific needs, because expertise is needed. We can't all be experts on everything. And so focusing in on a certain area is really important. And so let's all look for those ways that we can develop partnerships and strengthen the links between different actors. So we're not just seen as individual competitors in the space, but seen as partners that hand off the baton from one to another and share information, share deal flow with the ultimate goal of getting more capital to businesses in West Africa. The second thing is really highlighting what the three investors have said is this process of matching enterprises to investors. It is challenging. It does require focus, and it requires a lot of study and research to know your investor. There is a lot of information available on websites, and there are a lot of investors out there, and there's more and more every day. We have 200 or so investors in our database that do investments in Africa. But of course, you can't reach out to all of them. You got to know which ones. And so this process is really important for enterprises that want to raise capital. And so tapping into expertise that's out there, if it's agribusiness, Pangea Ventures is a great candidate, but there are others that are out there that are supporting this process and helping deliver the results that are needed with focus. And then the final point, which we didn't really touch on too much in this conversation, but I think it would be a great conversation on its own, is about impact measurement and management. We're all in this sector because we're concerned about impact, not just profit, but also impact. But that's a challenge because so many enterprises are focused on getting their businesses up and running and profitable. And even the impact side may not be a strength. Knowing how to project how many jobs will be created, that might be one of the easier ones, but understanding how they're going to reduce poverty among rural farmers, or, I mean, there's so many ways that impact can be measured. So how can we do a better job of that? Because my conviction, and I bet a lot of you agree, is that West Africa, if you look at the combination of impact and profitability, West Africa might be the best place in the world for impact investing, because the impact is so large when you think about the impact on lives and livelihoods of West Africans, that it's going to be a very attractive destination for impact investors if we can make that case well, that we can both produce profit and impact. And so how do we really professionally measure impact, also in a focused way that's convincing to an investor, that tells the story, and that shows the data? I mean, it's not easy to collect the right data, but we need to show data that impact will be generated by these enterprises. So that's that. I'll close with that. I think this discussion has been extremely rich. I'm grateful to Sharda, Jeff, Yvonne, and Nelson, and I are really eager to work as actors among the entrepreneurial support organizations that are out there. And we hope that we can improve the connectivity, and that this event did something to improve the connectivity in the continuum. So thank you for joining us today, and we look forward to the next event hosted by Andy.
Thank you very much, John, and thank you to everyone who attended this meeting. We're very grateful. Thank you for the questions. Thank you for a very interactive conversation. And this workshop, which we're doing in a series, has been funded by ACT Foundation. And so we're sending out thanks to ACT Foundation. Thank you so much for funding this. I'm going to post a link to this to the workshop series page, because we still have 2 more sessions upcoming. One of them is happening next week Wednesdays by 3 p.m. Yes, next week 3 p.m. Wednesday. We're having another session on building corporate partnerships during and post COVID-19. So it's very, very good to have us attend that too. I mean, we're talking a lot about partnerships, and this time around we're going to having partnerships between corporate organizations and entrepreneurial support organizations. So I'm going to share that link here in the chat box so you can follow that up. 3 p.m. West African time next week. Thank you, everyone. This event was recorded, and the recording will be shared with everyone tomorrow, while we'll send out the notes with questions answered by next week. Thank you all very much, and have a wonderful evening, morning, rest of your day, depending on where you are. Thank you so much. Bye.
Thank you. Bye-bye.
Thank you. Bye-bye.
Thank you.